Hey you guys, how's it going? My name's Jeff. Welcome to the channel. Today I am going to tell you about the secret sauce that I use to beat the market. And it's not really secret sauce because I'm telling you all about it in this video. And by the time you get to the end of watching this video, you're gonna see exactly how I'm investing this year. This is not financial advice. I'm merely speculating on how the decisions I'm making today might impact my future investments. So let's get started. You know, I think if you want different results, you have to do something differently. And that means thinking a bit differently. And what I've decided this year is that in addition to the monthly investments in the Vanguard Total Stock Market Index, which I've been doing since like last year, in addition to that, I want to invest in a way that's different from everybody else. And what that means is each of the 5 ETFs that I'm investing in at the beginning of every month this year, each one of these ETFs has a very specific part of the market that they invest in. And in the next 5 videos that I make, I'm gonna tell you about each of these ETFs so that you'll have an understanding of why I choose these particular investments. So today I wanna talk with you about AVUV. It's the Avantis U.S. Small Cap Value ETF. And you know, the reason this appeals to me is at heart, I'm really a value investor. The search for investments that are selling at a price that is low compared to what you get in return, compared to the intrinsic value, the true worth of a business. And so growth stocks tend to be like those that really got ahead in the past few years, where the stock price was really high compared to the earnings. Companies like Nvidia and Tesla and Palantir and all of those high-flying growth stocks. So you'd have like a price of $100 to $1 of earnings. The PE was 100 to 1. Well, with value, you'll have a price much lower. So the stocks in this particular portfolio have price to earning ratio where the price is like $9 to $1 of earnings, or $7 compared to $1 of earnings. And I believe that there's far lower risk in kind of losing money by paying too much when you invest in value stocks. So that's just kind of a summary of this approach to investing. So AVUV buys the smallest stocks in the stock market and those that are cheapest. And so my bet in investing in this particular ETF is that in the next year, and actually in the next several years, because I don't plan on, trading in and out of this ETF. I'm buying shares and my plan is to hold them for the long run. So this particular ETF, we're talking between $2 and $4 billion market cap, okay? The stocks in this ETF are in that size range. Sure, there might be a few that are a little smaller and some that are a little larger, but between $2 and $4 billion. So I'll just give you an idea of how those compare to some large caps. By the way, if you enjoy this video, please like it and also subscribe to my channel. So let me give you a few examples here. ExxonMobil, $452 billion market cap, 450. Compare that to 4 billion. So ExxonMobil is 100 times larger than the stocks in this portfolio. Or if you look at Amazon, 871 billion. So that's like 200 times the size of, the largest stocks in this portfolio. McDonald's is 195.8 billion, Starbucks 121 billion. So again, 2 billion, real small. I believe that once we get through this choppiness, once we get through the economy struggling right now, I think these companies have a chance to grow and to grow at a faster rate. Well, there's less certainty for these smaller companies because they could also go out of business. I believe there's a greater potential for growth. At least that's the bet that I'm making. So AVUV, I just checked, there are 698 different stocks in that portfolio, and the expense ratio is 0.25. The 698 is interesting because, you know, it's a very well diversified portfolio, okay? You think of the S&P 500 is considered a very diversified ETF or index fund, and that has 500 companies. So AVUV, that's a U, has 698. The expense ratio is 0.25%. Now, you know, I think that's a pretty high expense ratio. What that means is you pay 25 cents for every $100 invested. So, you know, you're paying $2.50 for $1,000 or $25 for every 10,000. That's actually pretty cheap, but it's not cheap compared to some of these index ETFs. And this is not an index ETF. This right here is an actively managed ETF. And the reason this is a little more expensive than the passively managed ETFs is that you're paying for a portfolio management team. This particular ETF has 3 or 4 people who pick which stocks make it into AVUV. So they have a number of screens. They pay attention to which parts of the economy, which sectors they believe are going to outperform. This particular ETF invests most of its money right now into financials and healthcare. More than 20% into each of these. So what they're doing here is they're betting on those 2 particular sectors doing better than others. And the other thing these portfolio managers do is they put extra emphasis on companies that are profitable, whereas some ETFs just broadly buy the whole swath of the market that they're covering. For example, the S&P 500, you know, invests in all large cap companies, the largest ones. It doesn't matter whether they're profitable or not, although that's not a great example because most of the companies in the S&P 500 are profitable. But if you look at the total stock market ETF, VTI, there are a lot of companies in there that are not profitable, but they're in the index, so they just make it. But with this particular ETF, the investors who manage it, the portfolio managers, screen for profitability. So I just like the fact that they're putting that effort in. I don't know if it's going to pay off over the long term, but again, that's kind of the risk you take when you do something different. And this is the most expensive ETF I own in terms of the expense ratio, 0.25. And yeah, I'm willing to pay it because you got to take a chance. Nothing ventured, nothing gained. So what I plan to do is to make another video about each of the remaining 4 ETFs that I'm investing in this year. I'm investing in 5. And I'm going to put minimum of $300 into each ETF. And as many of you guys know, like the prices for some of these ETFs are, for example, like $150 for a share. So if that were the case, I would buy 2 shares of the ETF. And if it was selling for, you know, $315, then I would just buy 1 share. But I'm going to invest a minimum of $300 into each of 5 different ETFs. This is the first one I'm covering. And in the successive videos, I'm going to cover each of the others that I'm investing in. And then you'll have an idea of, you know, what I am looking for and where I am focusing my investments during the rest of this year. Also just wanted to add that, you know, this isn't funny money. This isn't just something I'm doing, you know, as some kind of fantasy project. This is money that I need. It's the money that I'm earning through my photography work right now. When I get paid, you know, at the end of a photo job, I'll put that money in the bank and then I'll transfer it to my brokerage. And each month I'm buying these ETF shares. So, you know, I'm not going on cruises, I'm not flying around on fancy vacations or going out, you know, to eat a lot. I'm deferring consumption of stuff I don't really need so that I can invest, because my belief is that the prices are very attractive for a long-term investor. And I think the money that I put into the market this year, if I do it in a kind of thoughtful way, is going to, turn out really well in the next 2 to 3 years. So those are my thoughts about AVUV. Please put any thoughts or comments that you have in the comment section below. They always generate an interesting dialogue. If you like this video, please like it and also subscribe. I hope you found my analysis of this topic to be informative. If you did like learning about AVUV, then I think that you'll like learning about some of the other ETFs in my investment portfolio this year. So you can click on one of the cards at the end of this video to find out more about them. As always, thank you so much for watching, and I'll see you in the next video.